What's up, trading bros and sisters? I'm Wildcard, this is TB, this is Trading Floor, and we got a lot of ground to cover today. The title of this episode is The President Priced in a Crash. Sit with that for 1 second before I explain it.
Quick disclaimer before we get into it. Nothing we say on this show is financial advice. We're two traders talking markets, not telling you what to buy. Do your own research.
A lot happened overnight. The kind of overnight where you wake up and you're not sure if the market opens green or just doesn't open. Let's get into it. Here's what nobody is saying out loud. The market now has to price in the administration's risk tolerance, and that's creating uncertainty around where support actually shows up.
That's the structural frame for everything today. Without clear guidance on intervention thresholds, every fund manager is flying blind on downside protection.
Think about what that means for every fund manager at a desk right now. You don't know the pain threshold. You don't know where the cavalry shows up, and that uncertainty changes how you position everything.
And Monday morning, Trump announced Project Freedom. Within hours, 15 missiles intercepted over the United Arab Emirates, 4 drones taken down. Iran-linked. First coordinated strike on the Emirates in over a month.
The timing on that. Project Freedom announced in the morning. Attacks intensify by evening. That's not coincidence.
It's a response signal. And the Strait of Hormuz is where I want to focus.
How many vessels went through this morning?
0.
0.
Not reduced. Not limited. 0. 20% of the world's oil moves through that strait. 0 is not a risk premium. That is an operational blockade.
And Iraq force majeure is still active. So you've got the Emirates under attack, Hormuz shut down, Iraq not shipping, and oil at $103 a barrel.
Which is the retreated number. It spiked to 1.7 on the attack news and faded back to 1.3. The market caught the pullback, not the spike. That's confusion about where to price this, not confidence that things are fine.
The board sold the spike, which means it thinks this cools down. I am not sure it thinks right.
Stocked Up published a chart. If oil breaks above current resistance and pushes toward $113 per barrel, that's their next technical target. That's not my opinion. That's their published chart.
113. In this environment, that's not fine.
113 with Fed leadership transitions means CC is going the wrong direction into uncertainty. That feeds directly into the yield chain. Oil runs up. Oil runs up inflation. Inflation runs up the 10-year. The 10-year drags the 30-year. Pension managers stop buying equities and start buying guaranteed government yield at 5% instead. Capital leaves the market structurally.
And that chain is active right now, not theoretical. Every link confirmed this week.
Every link.
So, then the VIX at 17.75. In this environment, 0 ships through Hormuz. Missiles over the Emirates. Oil at 103, heading toward 113. The VIX at 17.75.
Either the market knows something we don't, or it is catastrophically wrong.
And I don't know which one scares me more.
The demining timeline is what I keep coming back to. Even if peace is announced tomorrow, ceasefire, handshake, full announcement, clearing the strait for commercial traffic takes months of active demining operations. This doesn't unwind on a press release.
The strait is shut, and the VIX thinks everything is fine. That's the show. That's the whole show.
And the biggest winner from a war that isn't ending. That's where we go next.
Palantir, ticker PLAT and TR. Palantir was supposed to be the software bear test. Here's what happened. 1 sentence and I'm done, I promised Russ. I said this play was real. In sentence. Now TB.
The part that matters to me isn't the number itself. It's what the market did first. The stock went red after the print. Think about what that means. The market saw 104% United States government revenue growth, and its first instinct was priced in.
And then it changed its mind.
Recovered to plus 2% overnight. The market called it overvalued, reconsidered, and stepped back in. That reconsideration is the signal. The initial sell shows you how high expectations were. The recovery shows you the thesis held anyway.
Karp was out there saying they literally cannot meet demand from warfighters. Cannot meet demand. That is a supply constraint, not a sales pitch.
Full year guidance raised to 71%. And I want to address the question people are asking, does peace kill Palantir?
A lot of people asking that.
No. Multi-year contracts. The backlog sustains through 27 minimum, even if peace came tomorrow. This isn't hype revenue. It's contractually locked demand that was already agreed to before this week's attacks.
Defense. AI is underfunded relative to the demand that exists right now. And the war is escalating, not winding down. Hormuz and Palantir are the same story wearing different clothes.
Connected directly. Zero vessels through the strait means defense contracting pressure doesn't ease. The revenue beat is a symptom of the environment, and that environment isn't changing on any timeline that hurts the stock.
That's the trade. That's the read. And Palantir is the clearest expression of it in this market right now. Palantir is the obvious play. But TB has been watching something quieter. And it matters more to the overall market structure than anything we've talked about.
10-year Treasury yield. It's been climbing, and my concern is we're approaching critical levels. Mike Jones flagged the 30-year at 5.173%, a new high eclipsing previous levels. When the 30-year sits at 5%, pension managers and wealth managers buy guaranteed government yield instead of equities. That is capital anchoring. Real money leaving the market structurally.
So, nobody's cutting rates. War is running up oil. Oil is running up inflation. Inflation is running up yields. Yields are pulling real money out of equities. And that's where we are.
And Fed transitions haven't even started yet.
Right.
Australia moved this week. Even global central banks aren't cutting. Inflation isn't dying on the international level. This isn't a United States problem. It's a structural inflation problem, and the whole world is feeling it.
Zero cuts in 26. We said that on Saturday. It gets confirmed a little more every day.
One more thing, quick one. Micron, ticker MU, up 8.7% intraday Monday after gap open at 570.
What's driving that?
They can only fill 50 to 67% of customer demand right now. Everyone talks about graphics cards. Memory is the actual AI bottleneck. That's your one legitimate bullish signal buried inside all this macro noise.
So there's a real trade in there. Just buried.
Buried. But real.
All right. I need a minute away from the macro. Because Ryan Cohen had a week, and I have feelings about it. Greg texted me at 2 a.m. Bro, Ryan's making moves. No further context. Just that. Flew M. Ryan Cohen is my guy. GameStop changed my life. I've said it 100 times, and I mean it every time. I want to start there before I say what I'm about to say. He made some big announcements this week, and the market response wasn't what anyone expected. Same day, same exact day, Michael Burry sold everything.
Two signals. Cohen making moves, Burry walking out. Stock drops. I respect what Cohen means to you. I do. But when Burry exits on the same day as major announcements and the stock goes down instead of up, that's a warning. I'm keeping it short because you know what this looks like.
Yeah, I know. I know.
We don't have to make it more complicated than it is.
No, we don't. Let's move. My system. One pass. What it did and what's coming. AMD stopped out. The system banked the gain and walked before the negative 5% day. That's exactly what it's built to do. It doesn't hold through ugly days waiting for a recovery. Amazon entered. System liked the logistics setup and the competitive positioning against traditional shipping. Citigroup, J, still green. Uranium in a war. System likes it, and I'm not fighting that call. 76% cash. My system doesn't trust this environment either. And that's not nothing. When a system that's usually hunting entries is mostly sitting out, that tells you something about what it's seeing.
Your system and the bond market are in agreement.
Yeah, that should make everyone a little nervous. All right, Wednesday. What are we watching?
AMD earnings first. Even without your position, the content bet between us still stands. That's the first real read on whether semiconductor demand is holding at the revenue level and not just the hype level.
Disney, ARM, AppLovin. 4 names in one session.
Wednesday decides whether AI revenue matches AI spending. That's the question the entire market has been pricing around for months. We get actual numbers Wednesday.
If those numbers disappoint, with bond yields elevated, Hormuz shut, and the VIX pretending nothing is happening, I don't want to be in anything I don't fully believe in going into that session.
The setup is fragile enough that a miss hits hard. A beat probably needs to be significant to move things sustainably.
High bar. Shaky floor. VIX acting like it's on vacation. Alright, here's what we're watching. 4 things. Write these down. Oil. Watch whether it holds above 103 or starts another push toward 113. That number is the inflation domino. Everything downstream changes if oil runs there.
Second, the 10-year yield. Watch for breaks above key resistance levels. If yields keep climbing, the pension allocation math changes and equities feel it.
Third, Palantir. Does it hold the overnight recovery, or does the market flip back to priced in? That stock is telling us how long the market thinks this war runs.
And Wednesday, AMD earnings before anything else. The number sets the tone for the rest of the week.
The floor's cracked, the ceiling's on fire, and the VIX is at 17. We got missiles over the Emirates, 0 ships through the Strait, administration risk tolerance unclear, and a Palantir earning 104% revenue growth that the market's first instinct was to sell. Pay attention Wednesday. May your exits be faster than your entries. I'm Wildcard. He's TB. This is Trading Floor. We'll see you tomorrow.